This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com.
Welcome. This is your daily dose of daily market wisdom with master trader Nick Santiago. I'm Kerry Lutz. It's 10/23/23, show 537. Well, Nick, we got Options X. One thing we missed talking about was the solar eclipse last week, or was it the week before?
No, it was last week. It was actually on the 14th of October.
Right. So everything kind of went crazy leading up to that solar eclipse, war in the Middle East, all this stuff, right?
Yeah, and just so everybody's aware, we have another eclipse coming up as well. This is going to be a lunar eclipse on the 28th of October, so I'm not sure the craziness is going to leave us anytime soon.
Yeah, that's for sure. And we have our monthly craziness here. October Options X is over, so more craziness.
Yeah, thank goodness. It was a wild, wild week. We had the last 3 sessions of Options X. The markets fell very, very sharply. Today, we're getting more back to normal trading without the institutional game playing that was going on last week, which was unlike anything I've seen this year, honestly. But this time around, the markets they're starting out a little bit on the weaker side, but they have certainly bounced off the lows of the day, and the S&P 500 tested the 4189 level, which should be a support area. This is a key level that has to hold. So it's going to be very telling in the next couple of days. The S&P can hold this 4181 level. There's chance that the markets can stage a little bit of a rally here. They've been really beaten up, though, especially last week with Options X.
Yeah, they were really on the down low here. So will they hold or will they fold is the question.
That is the big question, and we'll know soon enough. But right now, it's pretty amazing that we went down to 4180 on the S&P 500 in that vicinity, and so far it is holding. So we'll give it the benefit of the doubt. That's what you always want to do, unless you take out that level. If you take out that level, get ready. There's another big leg to the downside. Yeah.
Gotcha. Understood. Hey, so yields still the big topic in town.
Yeah, yields without a doubt are the big topic in town today. Currently, we have the 10-year, I believe, as we speak, at around 4.893%. We have the 2-year at around 5.10, and the spread is narrowed. It's only 17, 18 basis points. In other words, if this yield curve can start to normalize, that could be short-term bullish for the markets. We've had an inverted yield curve for over a year now, and that's what really screws up the banks. I tell my members all the time, and all the listeners over at In the Money Stocks, I say, hey, watch the KRE. The KRE is the regional bank ETF. That gives you a lot of clues. Today, that's up. Last week, though, on Friday, it got absolutely decimated. Yeah, it was absolutely decimated. But today, it's rebounding. Not a big day, but it tells you things are a little bit better, at least right now. We'll see where we go, as we get into the latter part of the day. So that's always a wild card.
That's a wild card, all right. So yeah, it's interesting to see. So maybe a little of the pressure on the Fed to raise for the coming month will be diminished, right?
Yeah, well, I'm already in the camp. The Fed is not going to do anything this month coming up. When we have the next meeting, the Fed meeting, I believe they get together on the 31st and the 1st of November. I just don't see them making any move. I think they're going to sit tight, and we'll see where we go. Yeah, I don't think they're going to do anything here. I think Jay Powell's in the hot seat. Honestly, I feel a little bit bad for the guy because,
he signed up for it. He deserves it. He's
I shouldn't say I feel
here. Come on.
I shouldn't say I feel bad for him, but government spending is out of control. And, what chance does this guy have if there's wars busting out around the country? He can raise rates all he wants. If this Middle East escalation turns into something a lot bigger and expands, inflation's going a lot higher. So he really has got his back against the wall. But like you said, they signed up for it. They know what's going on. They're not stupid people.
All right. Hey, so energy, we got a big merger. Let's talk about this merger, Chevron taking over Amerada Hess as us old people like to refer to it.
Yes, so it looks like that deal is going to go through. It's a $53 billion deal, I believe $171 a share. You also have to remember, just over a week ago, Exxon bought Pioneer Natural Resources. So this could be the start of more takeovers and consolidation going on in the energy space, and I think it's just the beginning.
All right, so now that we're talking about energy, what the heck is happening with nat gas?
Well, you got to remember last week, nat gas had a monster rally, right? It ran up, it broke out, and went all the way up to around, I believe the high on the continuous contract was 347. And then you pulled back sharply to the breakout point. And that's, believe it or not, it's a lot of this stuff was options X related. This is what happens. We've seen nat gas, much like gold, either moves up sharply during options X on a monthly expiration, or it moves down. And in this case, it moved down. But I still like it. I still own it. And I'm looking for a lot more upside. I know people are, it pulled back, but that's just the way markets work, especially when you have these moves. You get these breakouts, and then you get a time period where you go into options X where the institutional game playing is at its highest. And that's exactly what I think we experienced.
Exactly. Couldn't agree with you more. So we kind of alluded to this, the geopolitical events being the major wild card. My own personal opinion is I think 2 or 3 more wars are going to break out in the next 6 months. And because we're in this war cycle, right?
Yes, we are. And, again, it's not just in the Middle East. We're going to see, there's always a chance that it could happen in China with Taiwan. It can happen China with the Philippines. I mean, there's a lot of different, geopolitical events that are going on around the world. And we know that Central America or Latin America, South America is never stable. So there are things over there that can erupt as well.
Yep. Hey, the sky's the limit, right?
Sky is the limit when it comes to this stuff now. And again, I think you got to be very, very careful here as we go forward. But this is the sign of the times.
Yeah, well, it makes those defense stocks. We don't really ever talk about the defense stocks, Nick, but they're certainly the prime market beneficiary of what's happening now.
Oh, without a doubt. In fact, if you just look at, October 6th, Lockheed Martin was trading at, $393. Now it's at $450. So, these stocks are always benefiting from war, and they always have, and I guess they always will.
Yeah, well, I can't find any reference to this in the history books, but I know I read it, that the company that made the fuses for the artillery shells in World War I, prior to World War I, they basically leaked it to the Germans or licensed it to them, which greatly prolonged the war and made it much more horrible than it would have been otherwise. It looks to me like it's been excised or revised out of the history books, but I know I've read this before.
You probably have. Think about how much stuff has been taken out of the books or refabricated, as I like to say, because you can't really even trust or believe history anymore. We find that so many cover-ups. So what's the old saying, Kerry? I think the history books are written by the victors.
Yeah, the winners write the history.
So, there you go. And it's just very, very difficult. I believe nothing anymore. That's why I look at the charts, because if I didn't have the charts, it would make me insane.
Yeah. Well, it's healthier to believe nothing than to believe everything, right?
I believe it is. I believe that is the case.
Hey, well, it reminds me of this T-shirt that I have. I'm a conspiracy theorist. Let me start over again. I identify as a conspiracy theorist. My pronouns are told you so. So in the meantime, gold and silver, man, they've been racing. Looks like they're pulling back a little today, but we hit over 2,000 on gold again, and nobody even mentions it.
No, it doesn't even get a mention. I took profits, full disclosure, on my silver trade on Friday on that big run up, and I'm just going to get back in on pattern. I hope it lets me back in, but they're not pulling back very much. A little bit of a pause. They need to stall, take a breather here, because they've had such a big run up since October 6th. But that is a very, very bullish run for gold. And you know what would be more bullish, Kerry? If gold closes up here on a monthly closing basis. So, we only have about 8 more days left in this month. And what a move gold has had, going from the low 1800s to over 2000, right now sitting at around 1990. Watch that monthly close, and we'll be talking about it. It's going to be a very bullish close if it does close up here.
And you said 1985 was resistance, right?
Yeah. I said, basically right around 1980, 1978, anywhere in there, was a resistance level, and we cut right through that and closed above it on Friday.
Right. So highly bullish. How's the 200-day moving average looking?
Well, the 200-day moving average on the daily chart for gold futures is sitting at around 1940. So we're basically 45, 50 points above there at the current moment. So that's a bullish indication too, when price gets above all of its key moving averages, and it's well above it, because if you recall, just going back to October 13th, funny date, the 200-day moving average was resistance, and it caused gold to pull back, and now it's cut right through that like a hot knife through butter.
Yeah. And obviously it's well above its 50-day moving average as well, right?
Yes, 50-day moving average on the daily chart is sitting at 1926, and we're currently at 1990, so it's well above there.
So we had a double cross, right? Don't they call that the golden cross?
Well, the golden cross will be when the 50 crosses the 200. We're not there yet, but the 50 is starting to turn up, and again, it has about 15 points to go before that does happen on a daily chart basis. But I just want to remind everybody this. If you go to a monthly chart, which I know a lot of people don't like to look at bigger time frames for whatever reason, it still baffles me. But you're going to notice that the 20-day moving average on the monthly chart, or 20-month moving average, is above the 50-month moving average. And the 50-month moving average is way above the 100-month moving average. And the 100-month moving average is way above the 200-month moving average. So what that tells you is there is a very, very strong uptrend in place for gold on a very, very large multi-year time frame on the monthly chart. That is very bullish.
Well, we always knew this was going to happen, and it appears to be happening now, right?
It could be in the infancy, but I believe it's just the infancy if it does happen. What we'll be talking about the breakout is, should it occur, and I think that's when you see gold go to 24, 2,500 rather quickly, and then ultimately 3,000.
All right. Hey, from your mouth, and where do you think silver can head, Nick?
Oh, silver's easily on the next run is going into the mid-30s. Then after that, you'll see it back above 50.
Wow. It's never managed to stay above 50 in all its breakouts, right?
No, it's never been able to do it. In fact, the last time we got to 50, you have to go back to April of 2011, and we actually got to 49.82, so it was just shy of 50. And then it came in, it collapsed because it was a parabolic move. But this time around will be, I think, a little bit different, because we're building off of a base in the 20s here. So if you go back and you look at silver now, we put a high peak in August of 2020, and then we made a series of lower highs. Then we put a bottom in at around 1750, 1740 in September of 2022. And now we've been consolidating sideways in the 22 to 25 range, really since January of 2023. So you have a full year of sideways consolidation. The bigger the base is when you launch, the higher the projection is going to be.
Okay. I like it. All right. So Bitcoin back over 30K.
Yeah, Bitcoin's on fire today. I'll give it its due. Bitcoin is having a very, very good day today. And it's on the back that these new Bitcoin ETFs are going to get approved. I guess several companies have put in for applications to get these new spot Bitcoin ETFs approved. And it looks like there's a good chance of that. At least that's what the stocks are, or at least that's what the action is telling us. Now, what I want everybody to do is look at a weekly chart of Bitcoin. If it closes above 29,810 on Bitcoin futures, that would eliminate the bearish pattern that is in place. And that would tell you Bitcoin can go higher. But right now, You got to see a weekly close, so that's not going to be until this coming Friday. And right now, Bitcoin futures are trading around 30,900, up about 4% on the day.
All right. Well, quite a week behind us, quite a week ahead. And if you want to know more, you should go over to Nick's site, inthemoneystocks.com. See how he's beaten the averages for decades and his extensive trading record. And while you're at it, take a look at the Twitter feeds at ITMS, at Nick Santiago01, at Kerry Lutz. And emails are welcome, kl@kerrylutz.com. And hey, leave your comments below on the YouTube channel if you're watching us there, and like, share, and subscribe, whatever platform you're on. It really helps us. And Nick, we will talk to you on Wednesday.
Sounds good, Kerry.